Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. Now, historically, the summer months between June through to August, they have always been considered one of the most lucrative periods of the year for commodity traders. And so far that trend, it is definitely living up to expectations. There's no denying that June started off with a bang, bringing with it a series of extraordinary money-making opportunities, from hotter than expected economic data to stubbornly high inflation, a brewing US debt crisis, to rapidly rising recession risk. And just in case that wasn't enough, traders are now on the verge of being gifted with even more lucrative money-making opportunities. As the world's most powerful central bank, the US Federal Reserve, they continue to make a series of back-to-back monetary policy errors. The most pivotal moment in monetary policy history, that took place last week, with Fed Chair Jerome Powell hitting the pause button for the first time in an aggressive 15-month-long interest rate hiking campaign. As widely expected, the US Central Bank, they held their benchmark rate steady after 10 consecutive interest rate increases, but it also signaled it would need to squeeze the world's largest economy much more before the year is out in order to get a handle on stubbornly high inflation. Rather than raising rates just one more time by a quarter basis point, as had been widely anticipated, most Fed officials, they're now forecasting there will have to be multiple further increases this year, bringing back memories of the serious policy errors made by the Paul Volcker Fed in the 1970s. A premature pause in the fight against inflation back in the 1970s, that led to a prolonged period of high inflation that required even tighter monetary policy, which eventually resulted in the most severe global recession since World War II. As proven through history, the more time central banks they pause rate hikes, the longer the problem goes on. Inflation becomes more embedded and less sensitive to rate hikes, which ultimately makes it harder to tame. Skipping a rate hike could prove to be the biggest mistake the Fed has ever made. There are many parallels between the current situation of Jerome Powell's Fed and what happened back in the Volcker era. As unbelievable as it seems, the mistakes made by the Volcker Fed back in the 1970s, they're once again being repeated again. After printing trillions of dollars during the pandemic, the Federal Reserve, they denied inflation was happening, letting it run hot throughout 2021. Then in early 2022, when inflation hit its highest level for 4 decades, the Fed dismissed it as transitory, only to finally admit they were wrong in March of 2022, unleashing their most aggressive interest rate hiking campaign ever by jacking up interest rates at the fastest pace on record, from virtually zero to a current rate of 5.25%. And now the Fed has prematurely hit the pause button whilst inflation continues to run well above 2% target. Jerome Powell's decision to pause interest rate hikes whilst also signaling future increases ahead, that has drawn parallels to the Fed's infamous stop-and-go policy in the 1970s, when inflation accelerated again on multiple occasions following a premature pause in the monetary policy action. Historically, the Federal Reserve, they've never been right on monetary policy and have a proven track record of getting it wrong on inflation time and time again, just like we're seeing right now. According to Goldman Sachs, inflation won't come down as quickly as the Federal Reserve would like us to believe. The reality is we're now in an environment where there can only be 3 possible outcomes from here: persistently stubborn inflation, stagflation, or recession. Each and every one of these scenarios presents an extremely bullish backdrop for commodities. If you want to know what markets think about the Fed's policy error, then you only have to look at commodity prices. The Fed's policy decision sent a total of 27 commodities, including aluminium, copper, palladium, platinum, gold, silver, nickel, zinc, crude oil, natural gas skyrocketing to multi-month highs on Thursday, with many notching up spectacular double-digit gains in a matter of hours. But the real star performer was European natural gas prices. The European benchmark surged over 50% on Thursday, racking up a phenomenal gain of more than 95% in the last week. Since the beginning of the year, a long list of Wall Street banks, from Goldman Sachs to Bank of America to Citigroup, they have repeatedly described commodities as their preferred asset class over the next decade. Earlier this month, JP Morgan, they announced that they began advising clients to dump equities and rotate capital into commodities now, ready to profit from the magnitude of events that are currently unfolding. And they're certainly not alone. Data shows that nearly 3/4 of central banks are now turning towards gold to hedge and safeguard against the risk of monetary policy era, which is just ironic because central banks are buying gold to protect themselves against the negative consequences of an economic turmoil that they themselves have created through their own costly policy failures and mistakes. According to a report from the World Gold Council, 71% of global banks surveyed said they plan to significantly increase their gold purchases over the next 6 months by an estimated total of 700 metric tons, worth 49 billion this year alone. Whichever way you look at it, one thing is clear: central bank gold demand is influencing sentiment and driving market dynamics. Right now, central banks are not only net buyers of gold but also record buyers. This trend shows no sign of slowing down anytime soon. Traders and investors should pay very close attention to this bullish trend that is emerging and has huge potential to move the market significantly. The bottom line is that central banks, they're buying gold for the same reason as everyone else: to protect their purchasing power, diversify their wealth, and capitalize on the high returns on offer in the current economic climate we find ourselves in right now. But make no mistake, this is not a buy and hold market. These exciting and fast moving markets, they're creating the most optimized environment for traders. So far this year, we have seen commodity markets notching up explosive double-digit gains to the upside and the downside in a single week, sometimes in a single day, not once, not twice, but on multiple occasions. So just think about that for a second. In today's inflation-adjusted terms, your money sat in the bank will not even earn that return in a year or even 5 years from now. That's why it's no surprise that banks around the world, they're struggling to retain deposits. Logically, it makes no sense why anyone would want to leave their hard-earned money sat in the bank on a near 0% interest rate while simultaneously allowing inflation to devalue their purchasing power, when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. Right now we have crisis on top of crisis, which, as traders know, it's translating to opportunity on top of opportunity. This is the time that traders wait decades for, because it's times like these that make millionaires and billionaires out of regular people. Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we've transparently documented through our weekly videos. If you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club, utilizing a proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures this quarter alone. Historically, each time commodities have started the year on a positive note, they've always gone on to finish the year outperforming every other asset class out there. These past few months have just been a taster of what is yet to come. If you want to take advantage of these extraordinary markets and huge money-making potential on offer, there's no better time than now. Go to jointhegoldandsilverclub.com to learn how our mentorship program can take your trading to the next level. Investing in yourself is the best investment you will ever make. Your future is created by what you do today. Make investing in yourself a priority, because nobody else is going to do it for you. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, we must cover palladium. We talked you through this trade setup in detail last week when we had palladium breaking all the way back down towards 4-year lows, breaching below the lows that we saw retested back at the beginning of March here, providing a lovely setup to go long here. In fact, this is where we went long, as you know, and in the last week we've now delivered over 1,000 points profit on this position so far. Very fast profits. Palladium is up 8% in the last week. As we mentioned, the Federal Reserve, that supercharged the move even more. You've seen the further breakout over Thursday and Friday. Natural gas, another position that we're long, had a fantastic week last week. At the peak of the move, we saw a breakout of over 16% to the upside. Natural gas prices in Europe up over 95% in a week. Absolutely phenomenal move. But we've caught this move here. Lovely breakout on natural gas to the upside. As you know, we remain long palladium, platinum, copper, natural gas, gold, and crude oil as well. All of them having large breakouts over the last week. If we move over to copper prices last week, they broke out to 5-week highs. In fact, we reached the highest levels just on Friday with the spike higher. We got the usual selling pressure into the close there with quad witching on the Friday, which was to be expected. But overall, copper prices, they're up so far 6% over the month of June so far. They broke out 3% last week. We've taken the opportunity to bank into strength as we've continued to see this acceleration higher. Now, on the energies here, we've seen seen a lovely breakout to the upside as well. So we've seen the whole energy complex break out again after Wednesday's FOMC statement. So we've taken the opportunity to get into positions here on crude oil. And in fact, into the close on Friday, our crude oil position is currently up over 300 points. So we've now seen a 6% breakout over the month of June so far. Last week, oil prices up 2%. And you can see here where after the FOMC statement, this is in fact where we took the opportunity to buy on Wednesday after the FOMC statement had been delivered. And this is in fact where oil prices, they had a slingshot move over Thursday and Friday. Not only that, we also added to our platinum trade here on Thursday too. And platinum had a nice move into Friday's close. Currently, that trade is up just under 200 points into Friday's close. And as you know, we remain long gold here as well. Our gold position at the moment is currently up about 120 points right now. So we saw that initial knee-jerk sell-off after the FOMC statement, a bear trap, and then a lovely reversal here into Friday's close. So again, there have been back-to-back opportunities yet again for you to capitalize in the last week. Everything from palladium, which has broken out over 1,000 points in the last week. We talked you through that lovely trade setup. Natural gas prices up over 16% now in the last week, breaking back out towards the swing highs. Copper prices, as you know, broken out to 5-week highs. We've scaled out of more profits on this trade. Platinum, we've taken a new position on. That's had also a nice breakout here after Wednesday's FOMC statement. We've seen a breakout here again on energy. So both WTI crude oil and Brent crude oil rallying after Wednesday's FOMC statement. And also gold alongside silver breaking out to the upside, with silver breaking out 1.27% into Friday's close, following on from again Wednesday's FOMC statement and Thursday's European Central Bank announcement. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders and only reserved for professional traders in the banks and hedge funds with access to powerful game-changing insights, including where the banks and hedge funds, they're buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, the weekly, the monthly, the quarterly, real-time data-driven cycles and intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there's no better time than right now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will, of course, get in touch with you ASAP.